look, if you are watching the recording, make sure you do get back to the person that shared it with you and say thank you, because I hope to learn a little bit tonight myself, but more importantly, I'm going to share some of my experience with you and to just showing you that there is a future in cryptocurrency, but with all cryptocurrencies, you have to make sure that what you're getting involved with has got some long-term growth potential and security, and it's actually going to be around for a long time. So tonight we're actually going to go through a very quick PowerPoint on the future of crypto payment coins. A lot of cryptocurrencies, there's literally hundreds of thousands of blockchain projects, and cryptocurrencies are a version of blockchain projects. And payment coins are a cryptocurrency, so they are used as currency. So I want to go through a little bit about that, big coins, small coins, and government coins that are coming out. So I'll quickly pop over to a screen share, and we'll just run quickly through the PowerPoint so everyone can see that PowerPoint okay, I hope. So the future of payment coins, as you can see, there's lots and lots of payment coins out there. We just have to be aware of what we're looking at when we're getting involved with cryptocurrencies to make sure that they do have some long-term growth potential, long-term usability. So payment coins are coins, like I said, that you can actually use to transfer value between each other, which a lot of cryptocurrencies can do that outside of payment coins. But also they're going to have some applications for buying goods and services. So my name's Andrew Squillari. I'm a digital asset strategist. I've been involved with cryptocurrencies for nearly 5 years now. And look, it's fantastic to see an evolution of a business, of where the companies in cryptocurrency have gone. Some have exploded with great use cases, great technology, great business managers, and a willingness to comply to local legislation. So they have done really well. And of course, in the opposite side, some companies have vanished because something didn't quite fit. So now that I've been around for a few years, I've got some good friendships and good knowledge, and I'm hoping that my knowledge will give you some more confidence to make sure that you look at this financial services area more in depth, so you have a greater understanding and develop some confidence and get involved like I did 5 years ago. Now, financial disclaimer, I'm not a financial advisor. Everything I'm going to go through tonight is of educational value from my experience. It's not financial advice or trading advice. I am definitely not a trader. I'm an investor. Should treat all the content with an eye to investigate further, reach out to a qualified professional that is licensed to give financial advice if you're going to go that way, but making sure that that person is qualified to give you advice in the area that you're looking for. And tonight we're talking about cryptocurrency. Now, the whole industry started around Bitcoin. Now, if you think about Bitcoin, there's a guy called Satoshi Nakamoto. Now, we don't really know if it's an individual or a group of people. It was just the name written on the bottom of a white paper, which is a technical document, a white paper, just a report basically stating the intention of a technology. So a lot of people who are really quite smart and tech savvy read this white paper. They used the algorithm in there and started creating this thing called Bitcoin. So this is the official white paper. So if you go to here, you will see the Bitcoin white paper is still very relevant now. And if you were to understand exactly in that document, you could actually create your own Bitcoin mining algorithm using that. So the whole idea was a peer-to-peer electronic cash system. So peer-to-peer means person to person, business to person, business to person to business. So just transferring some type of asset between people. The big difference between Bitcoin and the previous financial industry, which is what we're using right now through the banking industry, is there's no one verifying the transfers. So the transfers are a lot faster, and the blockchain algorithm actually self-verifies the transfer, and that's really important. So the technology verifies the transfer. There's no individual organization or people who are checking it, because the blockchain itself actually checks and makes sure that all transfers are done from you to the person you're wanting to send it, so you both have ownership at one end or the other. So this is the start of this whole area of cryptocurrency. Now, why was Bitcoin created? Basically, it was a way of circumventing the normal financial system with faster transfers, because transfers are very slow internationally. Cheaper transfers, they're very dear. In comparison to blockchain, to transfer wealth around the world, there was a $2.4 billion Bitcoin transfer only recently. It cost that person $7 to transfer $2.4 billion, and it was done in under 10 minutes. That is why this technology is revolutionary in the financial services area and why people are really starting to adopt it in their everyday lives. You have unlimited transfers. You can transfer any amount of money. If you've got it in your bank, in your wallet, in your possession, you can send it to anyone globally, quickly, cheaply, and there's no restriction what you can send. And it's uncontrollable transfers. So you can send it to anyone, anywhere across the world. Not saying that the transactions aren't traceable. They certainly are very transparent, but they aren't controllable. So no one can tell you you cannot send it to anyone globally, whether it's across the counter, across the country, or across the world. No one can say you cannot send that money to a person. So it does give you that ultimate freedom of choice about what you do with your money. And we'll talk a bit about ownership later on as we go through the presentation. Now, some of the big payment coins. So we'll talk about the big stuff because I like the blue chip payment coins, the blue chip cryptocurrencies, because as I said, I'm an investor. I buy solid investments that have very minimal risk. And I do like some of these coins here, but there's others that are out there, of course, that are really blue chip coins, Bitcoin being what I would prefer being the best blue chip out there. So Ripple or XRP, that's one of the big payment coins. That's a wholesale payment coin used between banks. So it's bank to bank stuff. You can buy Ripple as an investment and hold onto it, but it's not really the design of that particular coin. It is a bank to bank transfer coin. So a bank would buy $1 billion worth it, they'd send the Ripple across the world, and the other receiving bank would cash out that $1 billion in that side of the world. That's what it's for. Now, the funny thing about Ripple is created in 2004, which is quite a number of years before Bitcoin was. So it's been around for a long time, but in 2013, they migrated over and became XRP, and there's 100 billion coins in that particular company. It is a company, it's a private coin, it's centrally mined, out of a company in South Korea, so it's centrally mined as well, which is a bit different. And we've got Litecoin. Now, Litecoin, when I first got involved with crypto, I thought it was a version or a type of Bitcoin, but it's actually not. Charlie Lee started up. He was a Google technician. It's its own blockchain. It's linked to the Bitcoin blockchain, so it's verified through Bitcoin. It's got 85 billion coins, but it was faster than Bitcoin. This was the big problem with Bitcoin. It takes 10 minutes to transfer coins between people. So Litecoin back in 2011 was a faster, more efficient way of actually sending cryptocurrency between each other. So 2.5 minutes, you got to wait and transfer happens. You know, your normal transfers for Visa, MasterCard are a 60-second transfer. So it may be 2 minutes here, but it may be even faster than that. But Visa, MasterCard is a 60-second transfer. And as we know, that system is very quick. So you never wait for a minute or 60 seconds for those transfers with Visa, MasterCard, but Litecoin, it's 2.5 minutes or faster. Now, Bitcoin Cash. Now, this is one of the first, what they call as hard forks of Bitcoin. So what happened back in 2017, there was a hard fork. So Bitcoin split into two different coins, one being Bitcoin, the other one being Bitcoin Cash. Bitcoin Cash was started by Roger Ver, and it's got 21 million coins, but they're bigger, faster blocks, similar to Litecoin, but it's exactly like Bitcoin in technology, except it's bigger blocks, more what they call hash power. So it's a faster technology, an upgrade of Bitcoin, but it's not as popular as Bitcoin, of course, because it has got the branding, and it's a separate type of coin to Bitcoin. Similar to Bitcoin Satoshi Vision, it's Bitcoin BSV. We've got our infamous Craig Wright. He's an Aussie from Melbourne. He's a computer engineer, cryptographer. He has said that he is Satoshi Nakamoto in quote America, but we don't know if it is true or not. But it's a hard fork of Bitcoin, again, created back in 2018, so not long ago. BSV is sort of based out of Brisbane even. I know there's a big BSV network there. And it's just a version of Bitcoin. And again, the blocks are very fast and they're a lot bigger, and the transfers happen a lot faster with BSV. And one of the other big payment coins in the world is called USDT or Tether. So US dollars, Tether. So it's tethered to the US dollar price. So it runs at about $1.46, $1.47 per coin, but it's linked to the value of the US dollar, and they have the hard assets in cash or gold or other assets linking it to having real world value. So that's why they've tethered it. Created in 2015, there's 9.5 billion coins. So they've got a market cap of 1.5 times that, because that's what is now $1.46 Australian for one tether coin. So these coins here, they're the second largest tradable coins now, because people are buying cryptocurrency with tether back and forward and do trading. So tether is becoming very good because it is a digital version of US dollars. Some of the smaller coins really do have me a little bit concerned. That's what the intention of tonight was, for you to understand that some big coins out there that have got some longevity, they've got some good price dominance in the area. They've been around for a long time. They've got some good solid companies that are running and operating them. But there's a lot of smaller payment coins out there that we're going to get in contact with, our family, friends, and the people we know are going to talk about the growth potential of these smaller payment coins. And we have to be a little bit aware about a few little dangers that are hold with them. So there's many payment coins. Of late, there's a lot of promoted cryptocurrencies platforms promising merchant adoption and merchant platforms. So if someone comes up and says, you know, I've got a merchant coin, you can, you know, use this coin to buy goods and services off merchants, and there's a platform that you can go on to log into, like eBay or Alibaba, and use that merchant coin on there. But you've got to buy the coin first, then you've got to go to the merchant. Hopefully that merchant actually accepts the coin at whatever value is on the day. The value is going to be fluctuating, depends on the size of the community. So there's a lot of variables in this area here. And of course, the size of their community or the potential to grow determines their success. So if they've got just a payment coin, I believe that what's going to happen in the future is the next evolution of cryptocurrency adoption is going to have a serious effect on these smaller payment coins, and I'll talk about that soon. Some other payment coins you can get involved with are exchange coins. It's always great to have exchange coins because that does have a good community, a solid community that do like that exchange, and they're going to be using that coin on the exchange to get the rewards that that coin offers the community within that exchange network. So you've got BitMax, got the BTMX, you've got Binance, the biggest cryptocurrency platform in the world, Qcoin, Huobi, BuyBox, you've got Onyx or OKX, and Bitpanda. It's got the best, and Dacxi with the Dac coin. So these are all exchange coins. They've all got the individual use cases. Why you would use those coins are exclusively on those exchanges to get the benefits on what that exchange offers those exchange coin holders. So you'd have to check out what you can use BNB for, what you can use a DAC for, what benefits BTMX actually gives you when you actually get involved with those platforms, and decide whether you buy those coins. But it's always great to have some of the exchange coins just to get the benefits that they promise on the exchange. And other merchant coins. And like these top ones, merchant coins are cryptocurrency coins with limited use case. They're only really to replace cash. That's what they're for. They're in lieu of using Aussie dollars, you're going to use a different version of cash called the cryptocurrency, and they're going to be used for merchants. They're exclusively used by merchants and customers to make purchases of goods and services. They don't have any other use case except of just giving you another option except whatever you're planning to use now. So you can use, of course, these big coins as payment coins, or you can use these smaller ones as well. So of course, the bigger the coin, the less volatility. The bigger the community, the less volatility. You know, they'll go up, less volatile than the smaller stuff, because smaller stuff can be manipulated, and you have to be aware of who's actually promoting these coins. So there's a lot of YouTube influencers that say, you know, zippity-doo-dah coin is going to go to the moon, it's fantastic, and you should go buy it too. And they won't tell you that they own 10 billion coins and only 11 billion available. So as soon as you start pouring money into that coin because they've told you it's a fantastic coin, they start their selling process until it's completely sold out. And when they're finished, they just run away and dump it on you. So you'll be aware of all the little tricks that some of the influencers around the world do use in order for you to be the next $1 million coin. So just be aware of that. And a lot of them are just simply payment coins because it's easy to walk away from. Now, what is and why CBDC? So CBDCs are central bank digital currencies. Now, this is the big shift in cryptocurrency. This is where I see the biggest danger for the smaller coins, the small merchant and payment coins. This is why I'm doing this presentation tonight, so you can see what effect these CBDCs are going to have on smaller payment coins globally. So CBDC coins, they're issued by the central banks of each country. So they're going to have a very big community usage and adoption when they get released. So as soon as they get released in the marketplace, the country will have access to them. The country will use them because there'll be incentives for you to use them. Mainly fee incentives because there'll be fast transfers because they're blockchain based. There'll be cheaper transfers because they're using no other external provider to verify the transfer because it's all blockchain based. There'll be unlimited transfers, so you can send and receive that coin within the country at any amount you like because there'll be blockchain verification, so you won't have any limits on it. But the last thing, which is the most important thing, that is what I believe we have to be aware of and educate about, is controllable transfers. That's the one negative that I don't like, is making sure that you understand that these coins are completely transparent and they are completely in the control of the issuing entities that created it, which is the central bank. So they know exactly what you're spending, they know where you're spending it, and they can control you spending any more if they so choose to. So even though CBDC coins have faster transfers, cheaper transfers, and unlimited transfers, just like all other cryptocurrencies offer, they do have this one thing, it's controllable transfers. And they can actually be used for wholesale CBDC transfers, combined use with distributed ledger technology, which is blockchain technology, enhanced settlements efficiencies for transactions. So again, whatever cryptocurrencies were put out there, invented and put in the world in 2008, which is faster, cheaper, and unlimited transfers, 3 out of the 4, these coins will have a very big effect. So all the merchants across China right now are actually implementing a CBDC coin payment system through their businesses. All the multinational companies like McDonald's and Starbucks, they're all putting in this extra payment option so that they can accept a central bank coin issued by the Chinese government. It's that easy. So a lot of the smaller payment coins are going to be affected by that, because why would you use a smaller payment coin when you can use a national one? As a merchant, you don't really care too much because everything's going to go through the books anyway. And the businesses are going to keep on running, so the government's not going to do too much to those businesses. But you as an individual, you may want to have other options, but the smaller coins may be affected heavily by CBDCs. Now, what it really is a shared ledger in the middle, which the CBDC payment system has. So this is the government. They'll issue money to commercial banks. The commercial banks will issue it out to customers. The central bank will issue it to commercial banking and hand it out to commercial customers. The central bank will also hand it out to other central banks, so you can do cross-border payments. They can go out to provide cash to other providers as well, to the market makers, to the share markets, stuff like that, and obviously lend that currency to large corporations to make payments, or use as part of their payment service providers like WeChat, Alipay, and we've even got PayPal starting to get involved heavily with cryptocurrencies, and they will be obviously issuing some form of CBDC payment as well, because it's just purely blockchain based. So this is how CBDCs are going to be rolled out into the community. And where that really fits is right in the center of all the payments areas. So settlements, accounts, general purpose, and wholesale. So these are area, and obviously this area on the outside is all the traditional system that this is going to be the center of. So that's just a little graph. You can watch the recording and go through that yourself a little bit at a later date, because it will be YouTubed. So this area here is going to be a big effect into the future, and a lot of the smaller payment coins will lose their market efficiencies because of it. So the biggest effect of CBDC coins is going to be felt by the smaller currencies that are presently out there being talked about. It removes the local economy from the merchant coins because of the competitive advantage that they once enjoyed is now going to be swallowed up by the competitive advantage of a global and national cryptocurrencies issued by the government. So that competitive advantage of faster, cheaper, more efficient transfers is going to be taken over by governments. The only difference was one is controllable and one is going to be open market, so you don't have any control. So it's the only really area that the smaller and larger payment coins have over a central bank digital currency. Generally, people will, the prices will be stable on the transactions. I mean, the Aussie dollar, whether it's a digital or it's a paper form, it's going to be fairly solid because the community is quite large. And the bigger the communities, of course, the more stable those currencies are going to be. So having a big community startup with central bank digital currency is going to offer a lot more stable pricing than what we're experiencing right now in the crypto market. But the market will start to mature in the next 3 to 4 years. Generally, people trust national currencies. So what will happen is a lot of these coins will be liked by the general public because they trust the government to look after them and they trust the government to do the right thing by them and their currency. Whereas you've got private companies issuing you with currency, the trust factor is not as much and you're probably a bit more reluctant to use those particular coins. The general public will not be motivated to purchase merchant coins without a very huge use case. So you're not going to be wanting to use a smaller payment coin unless there's some really good rewards out of it. If there's some great incentives, if there's no demand, means the price will be low. And if you don't get a discount for using them at the merchant as well. So you've got to be basically, why would I use it if there's no monetary benefit to using those smaller coins? And most people won't use them because there will be no extra monetary benefit because the national CBDC coins will be there. And ultimately, educated cryptocurrency users will be motivated to use free market coins that have merchant usability. Now, we're already seeing a lot of blue chip cryptocurrencies now, Bitcoin, Litecoin, Ethereum, accepted by merchants globally. More and more merchants are going to be accepting Bitcoin, Litecoin, Ethereum because they are the blue chips. So those particular payment forms are going to explode and they will work alongside and work with the central bank digital currencies as well. So we're seeing Australia Post now selling Bitcoin in Australia. 2 to 3 months' time, you have PayPal with over 3 million people involved. Selling Bitcoin. A lot of the banking sector over in Europe is buying, selling and storing cryptocurrencies for their clients as well. So we're going to work alongside the big blue chip coins, but a lot of these smaller payment coins will be dramatically affected by these CBDC coins because of trust and the incentive to use them. So just be aware of that. The ongoing effect, local and global merchant coins will struggle with long-term growth, usability, new competitors with bigger rewards because there's always going to be other competitors that offer better incentives for using them. And ultimately, it's trading volume that really affects them. So as a community grows, the demand on the coin goes up, so therefore the price goes up. But as the demand goes down because they're using other coins or using other incentives, or the community is no longer growing, then the price will actually drop back down again. So that's a thing to remember about the size of the community. It does affect the value of your coin, the currency that you're holding. Most merchant coins are either MLM based, business network marketing based, so that does have a trust factor that's a bit lower than traditional advertising forms or issued by government, so you have low trust models, and merchant driven. So a lot of merchants, we see a lot of merchants that have got a payment coin. We've got the barter card companies come out with a coin, but most of that company there, the merchants are the people that are buying the coin and they want their customers to sell it. But as you know, most merchants won't be selling these coins to their customers because they're too busy running their business. So that's not their specialty. They're out selling products and selling currencies way out of their specialty, and you'll need a sales force to sell these merchant coins to customers, and merchants won't do that because they're just too busy running their business. Global payments coins will be in demand because the general public will slowly be educated in the benefits and ownership of controlling their crypto assets. Now, once these CBDC coins come out, they will know that, oops, where are we? They will know that these controllable transfers and the transparency of transfers will be a very important thing, and they will not want to. And we've experienced a lot of our freedoms being taken away in the last few months, and I think most of us want to have a higher level of freedom. We'll be looking for currency freedom more so as time goes on, when we realise that we have been locked down for too long. So once people get involved with cryptocurrency, they'll understand the free nature of Bitcoin and technology similar to Bitcoin, and how the controllable nature of CBDC coins will affect them. So they will be wanting to regain their freedom like I did. And that's why I got involved with cryptocurrencies 5 years ago. And as they become more educated, they will grow in value as market exposure grows. So a lot of people will be exposed to cryptocurrencies because of these CBDC coins. They will understand that they're using cryptocurrency. They will start looking at the industry in different eyes. They'll start to get involved with learning platforms like the Dacxi platform and learn about cryptocurrencies, understands the benefits, dangers, and advantages of getting involved with other forms of payments that give them the same fast, cheap, and instant transfers of the CBD